Okay, we're live. Uh, okay, welcome everybody to Wall Street Reporter's Company Spotlight for today, October 27th. I am here with Icanic Brands. The CEO is Brando Kou. Brandon, welcome.
Pleasure to be here. Thanks for having me.
Brandon, next week you're going to be presenting it at Wall Street Reporter's Discovery Day live stream. You know, as you know, our goal is to bring our audience stocks which have that 10x to 100x upside potential. We've had a number of those winners in recent months. Would like to find out if Icanic is going to be our next 10 bagger. And so today's interview really is kind of an opportunity for investors to kind of get to know you informally, so to speak, and understand what your vision for the company is. And next week we'll have you give us the the formal presentation. So with that said, Brandon, for anybody that's new to the story, what does Icanic Brands do?
Yeah, so Icanic Brands is a leader in California. We purposely chose California. It's the most competitive market. It's got the longest legacy. You know, we liken it to Napa Valley, right? Napa Valley will always be the home of wine. And for us, we believe that California is always going to be the home for cannabis, right? It's going to be the most eyeballs, the biggest market. And so our goal was to really focus on winning in that state and then expanding from there. Our main focus is pre-rolls and light derivatives. So anything within the pre-roll or pre-roll space is where we're focusing on. We have one of the leading brands in California, Ganja Gold. We're vertically integrated, and we're constantly working on kind of really filling out the product roadmap, acquiring and creating additional house brands, really with the idea of really winning in California.
Okay, what now, Brandon? For anybody that may not know, what is a pre-roll and why the focus on pre-roll?
Yeah, so the pre-roll is effectively like a cannabis cigarette for kind of in layman's terms, right? And so what's been really interesting is you think, well, how many people roll their own cigarettes today, right? Really, no one does it, right? You take the assumption that it's for ease of use and for all the reasons. You buy cigarettes kind of fully rolled, and so in the cannabis space, which is just kind of lagging a little bit behind. There's been this huge push for flower, but people really haven't gravitated as much towards the pre-roll. It's tough to manufacture. People complain about quality. And so we're really trying to break that mold, right? We're trying to provide a solution for everyone that's easy to use, that, still has that high quality, just as if you'd roll it yourself. But it's really a huge, pressure point in the market that we're really trying to solve.
Okay, and what's the what percentage of the market? I don't know if it varies by state, but what percentage of the market is pre-roll compared to edibles or whatever the other forms?
Yeah, so when we were kind of doing our research, it was really interesting. Really in California, only about 9% of the market comes from pre-rolls, right? So again, think about it from the standpoint of cigarettes. How many people roll their own cigarettes? Few and far between, right? And so our belief is that the cannabis space will go that way, and so we want to be at the forefront of that. But it just shows you that with only 9% penetration in the market for the pre-roll space as a whole, it creates a real opportunity for us to kind of help shift the narrative as we enter kind of this next phase of cannabis.
Okay, and so from what I understand, you have kind of like a unique advantage in the pre-roll space. You're using some technology. Can you talk about that?
Yeah, so we've really built the company on kind of this 3-pillar system. The system really allows us to go after our main goal, which is achieving a very high gross margin profile. As you mentioned, this 3-pillar system, it starts with technology, right? So unlike a lot of companies, our focus is really technology. What does technology do for us, right? It allows us to scale more efficiently. It allows us to reduce the need for human error, especially in a world like COVID, right, where everyone's trying to be responsible. Having less of a human labor force and relying on technology and automation has become, a huge component for us. With technology, a couple of years ago, we partnered with some leading engineers out of Silicon Valley to develop a one-of-a-kind automated pre-roll machine. That's currently live for us right now. But it's not just that; it's every component in the manufacturing process for us. We believe that we can be the bridge of bringing technology to a legacy industry, really with the goal of, reducing, the need for human capital and kind of giving us a superior gross margin profile. The two other pillars that obviously are very important to us is our sales platform, right? We have a 7-person sales platform across the state of California. This allows us to have touch points with, a lot of the owners, operators, bud tenders. Ironically, a lot of the buying decisions are still coming by way of recommendations of the bud tenders, employees of the shops. And so us having that real one-to-one relationship with the key influencers per se,
it's people business at the end of the day.
Yeah. And then, obviously the last component is the vertical integration, right? So for us, in order to kind of achieve the high gross margin profile that we're looking at, really kind of set us apart as far as a competitive advantage, vertically integrating was a huge component for us. So we are vertically integrated. We have our own flower supply in California, and it allows us to not only bring a high quality, more consistent product to the market, but it also allows us to take advantage of those economies of scale and really push towards this, this gross margin profile.
Okay. We're going to get into some of the brands and all that stuff, but what's interesting is you've mentioned a couple of things, which, I've really heard from, cannabis companies we've talked to in the past, which is, this, you've mentioned, a kind of a focus. I kind of hear like this focus on gross margins. What are your margins like? And is that like, how does that differ from some of the, the peers in your space?
Yeah. So our belief and kind of looking at more mature businesses, bringing expertise and skill sets from other industries, gross margin profile, our belief is that if you don't build a solid foundation, you're going to really struggle, right? As more and more competition kind of comes into the space, as the cannabis industry begins to get judged like other industries, gross margin profile is a huge component for us. And so we're really working to build that foundation, a gross margin profile, and then having the ability to kind of dial up and down, the rest of the SG&A expenses as we kind of grow, which will, ultimately bring, positive EBITDA to the shareholders. But yeah, for us, it's that gross margin profile that really is the foundation of the company that we're building.
Okay. So in order to maintain, to have those big gross margins, obviously you need to have, a strong, high quality brand where people are willing to, invest, pay for that brand. So let's talk about some of your brands
Yep.
and, how they stand out in the market, kind of their, market share, et cetera, any kind of background on like, customer reviews, et cetera, so people can understand why you're able to have those attractive margins.
Sure. Yeah. So we are very lucky to own one of the leaders in the infused pre-roll category, right? And so I think anytime you can be one of the companies that is a leader in a category, it gives you a unique position in the marketplace, right? So Ganja Gold is one of the brands that we own. It is one of the leaders in the infused pre-roll space. Obviously, this brings us tremendous visibility. Also allows us to use it as kind of a beacon per se. Certainly when our sales team goes in, people know the brand, right? So it kind of
good name, Ganja Gold. It's very catchy. I like it.
Yeah. And quite frankly, the leading SKU of Ganja Gold is a tarantula, right? It's an infused product. It's well known, obviously, throughout California. And when you talk about it, people recognize that product. And so again, it gives us tremendous positioning in the market, which, is obviously a benefit for us today, but certainly leveraging that for the future as we, further expand, we further create our own house brands, we further look at tuck-in acquisitions down the road. Having that kind of leader in a space gives us tremendous clout that we plan to really kind of expand on and take advantage of in the future.
Okay. You mentioned something. I'm gonna ask you about M&A opportunities in just a few minutes, but can you just kind of give an overview of like brief history of the company, what kind of traction you've gotten right now in terms of revenues, and then we'll talk about where you're going.
Yeah, so from a traction perspective, the Ganja Gold brand, and this is obviously before we acquired it, but it's been around for years and years and years, right? And I think what we've really been able to do is kind of blend legacy California cannabis with business expertise, outside business expertise, right? And so for us, that's really allowed us to penetrate the market, not only from a wide scale, but do it efficiently, right? So as I mentioned earlier, 7-person sales team, 5 out in the field, spread out across California, 2 inside, focusing on digital and additional kind of inside sales. But we're probably in over 350 locations across California. Again, our sales team is calling on these accounts daily, and really what that's going to do is allow us to grow not only again through the Ganja Gold SKUs, but also, with additional brands and acquisitions that we make in the future.
Okay, so having that sales force, it's really like, I was one of our companies is in the specialty pharma space,
Sure.
and they have a team out there, that knocks on doors of doctors, tells them about it's very similar. You have this this group of you mentioned it's 7, but actually 7 is a lot of salespeople for this space, because what do you have? You have you don't have that many dispensaries in California. I mean, that's enough to cover the whole state pretty much.
Yeah, I think it's the team was really built with growth in mind, and kind of what is coming down the road in the future, right? So we kind of over invested in our sales team, knowing that they would be the integral part to our ability to expand. We see a lot of our competitors who think about in traditional alcohol, where you bring on a distributor and the distributor does a lot of the heavy lifting. In cannabis, it really is you get out of it what you put in, right? And so our belief was that we wanted to over invest in our sales team. We wanted to have statewide coverage, which again would give us those relationships, knock down those walls, and again really give us part of the foundation for we think is going to be a very exciting 2021.
Okay. Yeah. So definitely, once you have those salespeople in place, I mean, it's very easy to put additional products into that pipeline. So it's
Yep.
and that kind of ties in with acquisitions, et cetera. We got a couple of questions that just popped up. So Graham is asking, you mentioned the technology. So Graham is asking, what makes your technology unique?
Yep.
Can be replicated? And if you want, talk a little bit about the tech side.
Yeah. So, again, technology as a whole for us is a huge theme. Obviously, we started with a automated pre-roll machine. For us at the beginning of the journey, and this journey was started, over 2 years ago. Cannabis is unlike a lot of other different inputs, right? So in traditional automation, you think cigarettes, or you think, bottling and canning from the beverage industry. A lot of it is you put the same input in and you get the same result. So automation becomes very easy. In cannabis, the biggest thing that we've learned is that every strain is different, right? In its texture and its consistency and its density. And, the name of the game in cannabis is continuing to innovate on strains, mashing strains together. So you're never going to be in a situation where you're using the same strain or same handful of strains, over the course of a year, right? And so the one thing I'll say about our technology is it has to be flexible enough. Our machine has to be flexible enough in order to handle the inconsistencies of the input while still delivering the same output, right? And so that's the one thing that it seems like a very easy process, because you take other industries and you say, hey, if they can do it with canning or bottling or cigarettes, why isn't it an easy thing in cannabis, right? And so you'll find that it just the inconsistencies of the inputs really presents a big strain on the machine. And so again, we're very proud of what's been built, because ultimately we think that it has enough of the flex, but obviously still delivering the same consistent output.
Okay, so that's interesting. And what about, so what kind of traction do you have like right now in terms of revenues?
Yeah, so the quarter that ended April, end of April, we did about $1.7 million of top line. Obviously, that's in a very unique environment, right? This whole thing of COVID, has really affected a lot of businesses. It's affected a lot of buying habits and behaviors. But for us, we feel very lucky that, we were able to really kind of weather the storm, position ourselves well for these upcoming quarters and kind of the growth that we're expecting. But yeah, I think, listen, no business out there was not affected by COVID. We were just lucky that we were deemed an essential business in California, and we were able to operate without, many hiccups. So for us, having a kind of flat quarter, from the previous one in a non-COVID environment was a big win for us. And now we think that we're well positioned to take advantage of it, especially, you see businesses all around us that are down 50, 60, 70% due to COVID, right? Some even worse. And so for us to maintain our position and where we were at was a big win.
Okay, and so you're in California, but you're also in Nevada. You're in in Las Vegas, right?
Yep. Yeah. So we have a facility in Nevada. We have a manufacturing plant. We have a cultivation, all on a 1.5 acre plot of land that Icanic owns outright. And so we are very excited about the Nevada market. Currently we're selling an edibles brand that was kind of a legacy purchase. We're also selling bulk flower. But our goal is to bring the Ganja Gold brand and our additional brands to the States. But we want to make sure that we do it in a responsible way, right? We don't want to be like a lot of our competition that kind of enters the market. Our focus is when we enter the market, we want to do so with a gross margin profile that is in place that kind of delivers financial results to the shareholders.
Okay, so in terms of, so we talk about like kind of where the company is. So, again, what's going to position ICAN for that, to be that 10x winner? So what's the growth strategy for the coming year? What do you have lined up that can really create some action in the stock? Because we want to get to the bottom line here.
Yeah. No, for us, 2020 was a platform year, right? It was building the foundation, reorganizing the house, creating a structure that would allow us to scale in a dramatic way. So, we think that 2021 is going to be that year of real growth. Looking at our ability to kind of continue to be a leader in the state of California through our Ganja Gold brand. We also recently launched a secondary sister brand called Taylor's. Taylor's is focused on the lower end of the market, delivering a $2.75 1 gram pre-roll at wholesale. Now leveraging our sales team to kind of cross sell and penetrate, our existing locations is going to be a big theme for 2021. We're also looking at additional house brands that we're creating, focus on different segments of the market, right? We understand that Ganja Gold, or any brand for that matter, isn't a fit for everyone, right? So how do we identify underserved parts of the consumer world that will allow us to kind of focus on that? So that's a big theme. And then I think, as you kind of touched on, looking at acquisitions is going to be a huge story for us, right? We are thinking about acquisitions in a little different way. It's not necessarily acquiring businesses. It's more acquiring brands, right? So I know that if I have my 3-pillar system, the technology, the manufacturing and the manufacturing process, the sales platform, and then our vertical integration, we can look at acquisitions from a different lens, acquiring them in kind of unique structures, but basically wiping out, most of the repetition and really kind of bringing to market these acquisitions, reformatting their gross margin profile to kind of bring it up to kind of where we feel comfortable. So, we're looking at a handful of acquisitions and we're very excited about it because, ultimately we have this platform, right? And so now the goal is to acquire, reduction and kind of integrate our format.
Okay. In terms of acquisitions, like what's your acquisition criteria? Like what kind of things are you looking for exactly? And what's out there on the market? Is this an attractive time to be doing M&A in the cannabis space?
Yeah, I mean, I think we're looking at companies, and again, we have a unique ability to look at companies in a different lens, right? So I don't really care what a target's gross margin profile is today, to be frank, I don't even care what their bottom line is, right? I know that we are acquiring brands and effectively IP that we can kind of bring into our three-pillar system, redo their cost of goods, improve their margins dramatically, reduce all of their SG&A that's not repetitive, because I know that I have this team, for example, the sales team, right? The sales team has additional capacity to sell additional brands, right? And so I don't need two sales teams knocking on the same doors. This is where the economies of scale come in, right? Even when we look at purchasing for various raw goods, tubes, cones, this is an economies of scales game. And for us, having the platform in place, now it becomes kind of very accretive when we look at acquisitions in the market. Yeah, we're very excited.
Okay, so it's interesting. You've mentioned this the three pillar system several times. So it seems like that's something that's really like you actually do have a system in place. That's something which could be scaled at this point.
Yep.
Is that?
Yeah. Everything was built, again, looking at 2020 as kind of that foundational year to really kind of set the foundation for which our house will end up being on. We really wanted to focus on what are our strategic advantages, right? How do we play to those strategic advantages? How do we leverage them? How do we kind of really create this positioning in the market that is different, right? I think a lot of companies, just in general, they build it with kind of the, we want to get this brand out there. We want to create sales, all that is great, right? But for us, it doesn't make any sense for us to focus on sales if we know that we're not making a margin on every product that we sell, right? And so for us, again, looking at this year, it's really been focused around how do we build this foundation? How do we focus on margins so that when we do scale, we're not losing money every time we sell a unit out the door.
Okay. I got a question from Graham here. Is asking if, Brandon, do you see companies like Afria that struggle with margins in pre-roll? Could they turn to you for your technology?
Yeah, I mean, again, I think the reason that we like pre-rolls, it's a very difficult thing to mass produce, right? And so, Graham's comment, regarding that specific name is no different than a lot of other larger players, right? It is tough to scale the manufacturing of pre-rolls, and that's why we looked at other solutions, right? If we had to rely on a human labor force time and time again as the only source for us to scale, we'd be in a position like a lot of other companies that just struggled to scale. And especially in a COVID situation, right? No one could have seen COVID coming, but it's even made the labor force potentially more expensive, right? Now you're having to worry about all these other components that weren't around in 2019. And so again, this focus on technology, we will look at, how do we best leverage the technology for the future? One of our focuses in 2021 will be working with strategic players to perform white label services, right? So, when you think of white label, historically, you think of a very low margin business that's kind of unsexy. For us, because we have this three-pillar foundation in place, a white label business actually becomes very interesting for us, right? So I know that we can operate it at a relatively high margin, but I think furthermore, it allows us to begin working with some of the larger players out there, becoming integral to their overall supply chain. And it's something that we're very excited about, right? So again, ensuring that it is a relatively high margin business for us, but really leveraging the pieces that we have in place to potentially work with larger brands is something that we're very excited about.
Okay, let's go to a couple more questions here. We have question about federal legalization. Your thoughts on that, Brandon?
Yeah, I think, listen, the election is obviously coming up, and I think the good thing is that on both sides of the fence, federal legalization for cannabis is a hot topic, right? And so obviously we're very excited about that. We operate in a very unique, highly regulated format right now, and obviously federal legalization will really open up the floodgates. we think that it'll just bring a ton of exposure to the space. But I think first and foremost, we are well positioned to take advantage of that, right? I think that you're going to see a lot of people that federal legalization happens, and everyone wants to create a brand, everyone wants to create a company, but it's tough, right? I think especially in a market like California, which is kind of a world-renowned leader in the space, getting into these accounts, having that relationship, having your product not only get on shelves, but then also focus on selling off the shelves, that that kind of key component to sell through, is tough, right? So we think that federal legalization is going to bring a lot of excitement to the space, and unlike maybe potentially new entrants into the market, we've been around, we know the game, and we are very well positioned to take advantage of what we think is going to be the floodgates really opening up.
Yeah, so it's interesting. So now it's becoming like cannabis is a business just like any other. You have margins, you have sales, distribution. So it's not every company has it's not every company has those skill sets. So it's it's a great opportunity. This is kind of what separates the men from the boys, so to speak. So. Brandon, let's talk. Can you talk about your background, also some of the the key members of the Icanic team?
Yeah. So we are incredibly lucky to have the team that we have at Icanic, and it's a blending of worlds, right? I think it's really a blending of this legacy cannabis expertise. There's no substitute for the experience when it comes to knowing the strains, cultivating, the sales team. Having that pure kind of cannabis expertise is something that is truly irreplaceable, right? And so we're very lucky to have a great team on that front. But I think at the same time, we also recognize that, as you pointed out, cannabis is growing up, right? And so what we think we've done a great job at is merging that legacy expertise with business and operational expertise from other industries, right? How can we take other learnings from other industries and apply it to this emerging category, right? And so that's really what we focused on, is really kind of blending the best of both worlds, and I feel very lucky that we have this fantastic team that not only has allowed us to get to where we're at today, but is also kind of helping us well position ourselves for the next evolution of our growth and cannabis as a whole.
Okay, Brandon, what's your vision for Icanic over the long term? Let's say 2-3 years out. What's Icanic Brands going to look like? Assuming everything comes together here.
Yeah, we really want to continue to be the leader in the most competitive market in the world, right? That being California, right? So our belief is that if we can do it in California, we can do it anywhere, right? So, fast forwarding a couple years down the road, we want to have a portfolio of brands that are leaders in the space, leaders in various subcategories. We obviously want to be vertically integrated, kind of continuing to follow the theme of our 3-pillar foundation, which really just, allows us to achieve that high gross margin business, right? And I think if we can do that and we can leverage our economies of scale, we'll be very well positioned for, this next phase.
Okay. No, so it's interesting. I just realized, every company, or all the great companies, they have kind of like a DNA, and for GE it was what is it, Six Sigma, right? For other companies, and you have the 3 pillars. So that's great. Let me see. We have a question coming in here. Here we go. Okay, so Capital Gain. I like this name here. You mentioned growth and your unique technology. How do you plan to get this brand and tech to other states, and how would that model help your top line and bottom line?
Yeah, we have the ability, I think for us, once we kind of own California, Nevada, right, we have established brands that people want in other states. I think the beauty of what we can do, leveraging our tech, leveraging our learnings from California, is we can expand pretty rapidly, right? So, for us, it's not only about bringing brands to other states, other territories that are in high demand or that people want, but but it's also being able to replicate and achieve those high gross margins that we can in California, right? So for us, it's going to be really kind of a an all-encompassing package as we look to expand, whether that be organically or with potential partners in other states. But for us, it's kind of dual focus, right? Obviously, we want to bring the IP, the brands that people want, the products that people have kind of fallen in love with, but at the same time, giving people the ability, or giving ourselves the ability, to replicate our gross margin profile by leveraging our technology in other states will be a huge plus for us.
Okay, so 2-3 years out, can you talk about some numbers? I mean, what is Icanic going to look like? Is it going to be 50 million, 100 million? What's the upside?
Yeah, I mean, again, I think for us, the upside is going to be in the growth in California and in other states, right? So, we've really focused on building that foundation. I think whatever that number ends up looking like, the one thing I can tell you is that it will be done very profitably, right? I think, again, we know that every opportunity that we're looking at, our focus is the gross margin, right? So the one thing that you will not get from our company is just high growth without any focus on kind of the bottom line, right? So whether, that number is 10, 20, 30, whatever that number is, our focus and our belief is that we're going to do it in a very responsible way, focus on our gross margins to really kind of drive value for the shareholders.
Okay. And it's interesting. Somebody mentioned the federal legalization. Yeah, definitely. Whatever happens, I mean, there's with the whole COVID situation, there's going to be more and more states are going to be looking for additional tax revenue. So this is just a great great opportunity to get those revenues. So
yeah.
It's just another tailwind here. So Brandon, let's kind of recap here. The next 6 months, like what kind of news flow can investors look forward to coming out of Icanic?
Yeah, I think investors can keep an eye out for, obviously how we're doing in California, right? How we're leveraging our technology to really kind of help our growth. Look out for kind of new brands that we are trying to bring to market. Additional tuck-ins that hopefully we're looking to make, and then geographically how we plan to grow kind of in the future. But certainly, again, all very exciting things, and we're very excited about the remainder of 2020 and what's to come in 2021.
Okay. Question from Jeremy: what's your cost per gram?
Yeah, so we really look at it. I mean, we look at it kind of in a different way per se. I think historically we look at it as cost per pound, right? And so, part of the reason why we vertically integrated was, we were paying $1,800-$1,900 a pound for premium indoor flower. Now, ironically, the market is kind of turned to a flower shortage, right? So we're seeing pricing, in the $2,700, $2,800, $2,900 cost per pound for premium indoor. I would say that our own internal cost, because we are vertically integrated, is around $1,000 a pound. So it's really reduced the cost of, really the single largest input into the whole cost of goods profile, significantly, right? And now we're actually able to, what at first was a way to kind of improve our own margins and reduce costs. Now, because of the flower shortage, we're able to sell a little bit of our excess bulk flower into the marketplace and take advantage of kind of those skyrocketing prices that we're kind of seeing in California. But again, the original intent for us to vertically integrate was to protect our margins, right? We see a lot of our competition right now, if you're not vertically integrated, you're paying $1,800 a pound for your single largest cost of good input today. And, tomorrow you're paying $2,800, $2,900 a pound. That's a huge increase in your overall cost of goods. But, what's been really interesting is you haven't seen that same rise at the retail level for finished goods, right? So what are brands having to do? We're lucky that we're not in,
nobody's raising prices,
right? But it's it's a real kind of disconnect in the market right now.
Yeah. Well, so you're saying at the retail level they're not raising prices?
Yeah, for finished goods, right? We're you take that flour input example. We're not raising our wholesale price by 30, 40, 50% into retail, right? Our wholesale prices have remained the same, and that goes for all the other brands out there in kind of the finished good world. So again, it creates a huge issue for brands that don't have this vertical integration component, don't have their supply chain in place, because you get swings like this with flour, and without the ability to increase your wholesale price, your margins really can get crammed.
Yeah, no, for sure. And what's causing the shortages? Is it the pandemic, or what's behind this?
Yeah, I think that listen, there was a lot of projects that were were in the works over the past couple of years. I think for a lot of these folks who didn't have their capital lined up, who may have not been focused on their own P&L, a lot of these larger cultivation indoor projects just got put to the back burner, right? And so all this supply, people kind of look at cannabis as hey, it's going to be a commodity, and then prices are going to get crushed. That only happens, I believe, with a strong influx or no restriction on capital to kind of build these types of sites, right? And so what happened was the capital didn't come in as fast enough. A lot of projects got stalled, and a lot of the supply that the market was expecting, especially in the indoor premium, just never came to market, right? And so it's been a real struggle, I think, for a lot of these brands, in the second half of the year with flower prices, continuing to go higher and higher. But again, I think, luckily for us, we don't have to fight that battle on a daily basis. We can take advantage of it when the market swings up by kind of participating in the upswing. And when the market normalizes, we'll still be able to appreciate, the original intent, which was to, reduce the single, largest cost of good input significantly.
Okay. So Brandon, last question, our favorite here in this program is, in your opinion, top 3 reasons why, investors should consider Icanic brands today.
Yeah. So again, just, nothing new, but, for us, the 3 driving factors, right? 2020 was a year built on the foundation. 2021 is going to be a year that we capitalize on that, right? So that's the first component. The second component is we think about the business, the industry different than most, right? Our focus is on a 3-pillar system, all driving towards superior gross margins. Without them, we'd be like a lot of other companies that, might not have the margin profile that we do. And then the last is our team, right? This ability to merge cannabis expertise, legacy cannabis expertise in the most desired market in all the world, and that being California, with a great team of business folks that come from different industries, where we can kind of bring additional ideas, additional concepts that maybe other industries take for granted, but in the cannabis industry, where it's an emerging space, a lot of these concepts, a lot of these focuses are somewhat new, right? And so being able to kind of truly merge legacy and business is kind of the third reason. So yeah, very excited about where we're heading. Obviously it's been a great year thus far, and credit to the team that we have. But 2021 will be an equally exciting year for us.
Okay. On that note, Brandon, I want to thank you. And we look forward to having you on our live stream next week for the Discovery Day live stream. Then we'll get into all the details, and we will see you then. Thank you, everybody, for joining us.
Thanks for having me, and we'll look forward to chatting soon.
Thank you, Brandon.